Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on ADVENTRX Pharmaceuticals Incorporated, traded under the symbol ANX. Members of TimelessWealth.net have requested an update to this chart coming off of Monday's trading session where it originally issued a technical opinion. If you are interested in viewing that original video, please visit TimelessWealth.net and look for it under the section entitled Publications. Also, bear in mind as I annotate this chart that every bar and or candle represents one session worth of price action, hence the daily chart. The first thing I had mentioned in my original video was resistance at the 45 3/10 cent mark coming off this trading session right here. That would have been the top Bollinger Band at that point in time. The trading session that followed experienced a breakout above that mark, so as resistance levels are broken they become supporting ones, as well as a breakout above the 50 cents per share mark, which represent a key breakout or a key resisting level. However, the price did not close above it, so 50 cents per share does remain key resistance. Now we've occurred another resisting mark at 52 cents per share. That's the bad news. The good news is that we're making higher highs, meaning we made a high here at 50 cents per share and another new high here, a new 52-week high to be precise, at 52 cents per share. At the same point in time, this trading session right here represented potential reversal in trend, that is this doji candle. As it was confirmed by this trading session right here, and as you can see the market gapped down and there was quite a bit of loss in terms of the price per share. Now if you had gone short on ANX coming off of this trading session right here, that was quite a speculative move, in fact very risky, because reversal signals are not reversals, they just signal the fact that it's a likely event, but it's definitely not guaranteed or a very likely event. So in any case, this trend was confirmed and the price did break down for one reason or another, whether it be profit taking or panic selling based on the gap down. Please do also bear in mind that when I mention gap down, I do intend to mean that in the event the price rallies or rebounds and begins to trend north once more, these gaps do tend to fill because these are gaps on emotion. People were either frightened, scared, or looking to lock in profits, which is why the market gapped down here as well as this mark right here. In any case, this once supporting level became resistance once more, and the market bounced off of the 10-day simple moving average at 36 2/10 cent, as well as the 36 cents once breakout level that we talked about on the weekly and daily charts. Unfortunately, coming off of Friday's trading session, as the price declined 22%, the market also broke below this key supporting level. So all in all, based on the past few trading sessions, it looks like a bearish market. Now, when I mention any and all of this, I don't mean to discourage anyone, make anyone feel bad about their investments in ADVENTRX Pharmaceuticals Incorporated. All I mean to do is update this chart and give it to you as it is. This is what's going on in the market. I don't want to sugarcoat it in any manner. What I do want to do is analyze supporting levels and look at levels at which we may see support and the bulls push the price back up and potentially test new highs. Here's an interesting way to look at the market at this point in time. Okay, so here we go. I've drawn these two trend lines. All I mean to say is that if you look at it from a longer term perspective, let's say you're an ANX long, you're looking at a high of 50 cents per share, then a higher high of 52 cents per share, a low at 26 cents per share, and a low at 30 cents per share. So all in all, higher highs, higher lows. This is exactly what you want to see from a longer term perspective. So let's talk about support. The first supporting level that we're looking at is 30 cents per share mark. That was the low coming off Friday's trading session. The price bounced off of it and ended the session at 31 cents per share. In the event that the market does decline below 30 cents per share, we're looking at support at the 29 4/10 cent area, parabolic SAR. When parabolic SAR are these trending dots right here, trend underneath the candles, that is considered to be bullish. So again, from a longer term perspective, the market is still bullish. Like I said, I drew those two trend lines to show you exactly why I mean to say that the market is making higher highs and higher lows. And then we have the 26 cents per share supporting level. In the event the market declines and rebounds off of this level right here, we could be looking at a chart pattern, a reversal chart pattern, in fact, at the 26 cent mark. The reason being is that if the price does test 26 cents per share, we're looking at a double bottom pattern. In any event, the 20-cent mark, which was a key breakout level I talked about in my prior video, and where I believe all of this began, is a must-hold level. We'd like to see this level hold in any event. If the price does decline and tests this mark and breaks below it, that would be a sell signal for me. That 20 cents per share mark currently agrees with the trending 50-day simple moving average at 19 3/10 of a cent. So this red line right here. Another longer term perspective look at this chart can be done simply by looking at this upwards trend line right here. So I just used these lows right here and extended this line through. So you can see this agrees with the 50-day simple moving average, as well as this must hold supporting trend line at 20 cents per share. As for resistance, I believe I made that quite clear. Minor resistance at the middle Bollinger Band and or 20-day simple moving average at 31 6/10 of a cent mark. So this dashed line right here. The 10-day simple moving average at 36 2/10 of a cent, or the 36-cent breakout level that we talked about in the weekly and daily charts in the prior video. So this horizontal line indicated in red, as well as this one right here at 45 3/10 of a cent, which would represent minor resistance. So let's just make that dashed line. But as for major resistance, 50 cents per share and 52 cents per share. So in conclusion, look for some sort of reversal signal in the market, whether that be a candle of this nature at the end of this downtrend right here, or a double bottom pattern, say 26 cents per share. And look for the market to continue to trade in liquid manner, meaning traders can turn this thing around at any point in time. And the market is definitely something that's unpredictable, so keep your head up. Don't let days or downtrends like these disappoint you in any manner. Try to take the emotion out of it and analyze this from a charting perspective and take a look at where we stand in terms of the price. Remember that these events are always emotionally driven, so when you're not looking at the chart but following message boards, threads, or opinions of various authors, you're really looking at an emotional perspective, and that may lead to an unwanted decision. So always remember to try to take the emotion out of it and rationalize what's really going on in the market, and always apply your own styles and buy and sell signals. So once again, this was Edward Stevenson from TimelessWealth.net. I encourage you to visit my site, tune into some of the materials I've recently added, including all sorts of articles, publications, educational information, and get in touch with me if you have any questions, comments, or suggestions concerning these technical opinions. Once again, this is TimelessWealth.net, and join our free newsletter for overlooked trading and undervalued investment ideas. Thank you for listening.